Most investors are chasing the wrong first deal, and it costs them years, and sometimes it costs them everything. But here's the thing, the right storage facility can 100% change your life. And in this video, I'm gonna show you how you can buy your first one the right way, because that's the key. Anybody can go out and buy a storage facility, but what we wanna accomplish is buying the right storage facility so that you can generate real cash flow, build long-term wealth, and finally have the time freedom that you've likely been chasing. And if you're ready to shortcut this entire process and have us guide you through it step by step, every single step of the way, then I want you to check out the Storage Wins coaching community and program. There's gonna be a link below where we help people just like you buy their first storage facility within 6 to 12 months. Now, before I dive into the meat of it, and I want you to stick around to the end because I'm gonna have something for you, is I wanna just share who this video is for. So if you're somebody who is tired of the traditional headaches of real estate, right? You might be dealing with tenants, toilets, and trauma. Maybe throw in some trash in there. Maybe you're a real estate investor and you're a burned out wholesaler or flipper and you're tired of chasing the transactional income, or you are what I call a W-2 warrior, right? You're stuck trading time for money and you want more predictable cash flow, you want freedom without managing a lot of people, a lot of properties, then this is exactly who we help inside of our Storage Wins coaching community, people who want to buy back their time and not just want another job. Now, why should you listen to me? Back in 2005, late 2005, I got started in wholesaling, have done well north of 750 real estate deals in my career, built a very successful business, but I got to a point where I hated the grind because I got into real estate for likely the same reason that you want to get into real estate or are in real estate, is all the benefits that real estate provides us without it feeling like another job. And I quickly saw in 2019 how storage offered high margin, low headache income, right? Low headache business. And I bought my first facility. I bought my second, my third, and fourth, fifth, and went on and have done several storage deals and have ended up selling off some of my portfolio and have made a lot of money in the process, despite some challenges with a few of those facilities. And now I own multiple facilities and help others do the same thing inside of Storage Wins. So really what I want to start to dive into is why your first deal is likely the most important one that you'll ever do. And one of the reasons I say that is because it creates momentum, or it can completely destroy your confidence. And think of confidence like a bank account. Are you making deposits into that, or are you making withdrawals into it? I just had a coaching call with one of our Storage Wins members yesterday where we were talking about this very thing. We were talking about making deposits into the confidence account through having a plan, a roadmap, and executing on that every single day, right? And that's one of the things that we walk people through when they join our community. Now, the problem is too many people are chasing shiny objects, right? And that could be different asset classes within real estate, different types of properties, or even overpriced storage facilities, and then they get stuck. And then analysis paralysis kicks in and people just don't know what to do next. So in my opinion, right, your first storage deal should really be a base hit or a double with some upside, right? Not some super risky deal where you're just swinging for the fences, where it's either a massive success or a complete failure, right? You wanna get into a deal knowing that conservatively you're going to do well, because a bad deal can absolutely bury you and a good one can set you free. So I think one of the first things that's important to talk about is defining your buy box. But before we even get to the buy box and we look at a specific deal, you need to get 1000% clear, and you have to have clarity and intentionality about what you're actually trying to buy and what it is you're looking to accomplish, right? Let me share with you some things that I want you to think through, and not just think through, but I want you to actually journal on this, write this down, because this is going to help form your buy box, which I'll talk about in a second. Do you want to be an active investor and operator, or do you want to take on more of a passive role, maybe as a limited partner investing in a storage deal? Are you looking for immediate cash flow or cash flow in the near future? Or are you in this more for the long-term wealth? And I don't want to pretend like you have to pick one or the other. There could be a hybrid scenario, but what's most important to you, right? Are you in a job now that you absolutely hate, or you're generating a certain amount of income or a salary from a business that just no longer serves you, isn't aligned with your vision, and the goal is to replace that income as quickly as possible so that you can build a bridge and transition from what you're doing, well, then if that's the case, then cash flow might be most important. But if you have an income stream and maybe you don't hate your job, maybe you're fortunate and you're just looking to add storage to your portfolio, then maybe what you're into it for is more of the upside, the long-term wealth building. So you can do both, but you have to pick one, in my opinion, to start with. What is the primary goal? Are you looking for something that's more local in your backyard, depending on what kind of market you live in? Or are you open to operating remote? You know, I had a conversation with a buddy of mine who's 7-figure entrepreneur. He's got a really, really healthy real estate portfolio. The thing is, he is dead set on only buying in South Florida. The idea of buying a piece of real estate in another state where he can't drive to it, see it, touch it, feel it, see the tenants, like he's got a mental hurdle with that. And I was having a conversation with him, helping him unlock the benefits of remote storage investing. So ask yourself distance-wise, where do you stand? What kind of market do you want to be in? And I'll talk about that a little bit here later on. Then do you want to be like roll up your sleeves and be super, super hands-on and something what I call a heavy lift, right? Like a heavy operational lift? Or are you willing to do some light value add things to the facility to increase the occupancy, the revenue, and the overall value, or not? Are you looking for something just more turnkey? Do you have capital or access to capital, that you can potentially bring into a deal? Or maybe you feel like you don't, and maybe what you could provide is the sweat equity, the time, the energy. So these are things I want you to think about that are going to help shape your buy box. Now, I actually, we have a video which we're going to link down below, and there's going to be a link there where you can actually get my buy box template. And in this video, it walks you through exactly how to create a buy box so that now you can send this to brokers and it helps you get clarity about the type of deals that you're looking for. Now let's transition to what the actual physical asset, what are some of the components? What does the framework look like in terms of your very first storage deal? Well, in terms of the facility, when I got started, my mindset was I want to focus on the larger storage facilities, like minimum 20,000 net rentable square feet, all the way up to 50 or 60,000, right? Knowing what I know now, if I was to get started and stick around to the end, because I'm going to share with you exactly what I would do now if I was getting started. And it's actually a bit different than what I did when I first got started. But right now I would tell people focus on facilities that are 10,000 net rentable square feet all the way up to 40,000, right? So you want it to be big enough where it can cash flow and have a significant impact on you, but small enough to manage, right? In terms of the vacancy, I like the occupancy of these facilities to be 70 to 90%. So basically we're talking 10 to 30% vacancy. I think is ideal, right? Now look, when I bought my first facility, I want to say it was like 56% occupancy. Right. So I had some work to do to get it up, and I ran into some hiccups and some challenges just because of the market I was in. I'll touch on that more because I think that's super, super important and a mistake that a lot of people make. So make sure that you stick around to this. But if I had to wave a magic wand on this, I'd say I'd like to buy my first facility 70 to 90% occupancy, definitely below market rents. At least 20, 30% below market rents. One of the storage facilities I bought on 90% seller financing, my Amelia Island facility was actually 100% below market rents. Meaning when we went in, we doubled the rates to bring them up to the average of the competition. So you want to find a facility that has below market rents because that's going to be one of the key ways that you're going to increase the value, right? That you're going to add value. And that's what ultimately allows you to generate more cash flow and build long-term wealth. I like to look for facilities. Oftentimes these mom and pop facilities don't have any type of fee income. What do I mean by fee income? I'm talking about, you charge an admin fee when they initially rent. That could be $15, $20, $25. You charge auction fees, clean out fees if you need to do that, gate fees, 24/7 access fees, there's tenant protection, right? You might want to partner with U-Haul and offer truck rentals. We don't do that, but that's another revenue stream. So really what you're looking for are the mom and pop operated facilities that are quote unquote unsophisticated, right? Maybe they have no website or a poor online presence. They don't have really good pictures. Sometimes they don't have no pictures. They don't have a Google My Business listing. These are all indicators of mom and pop run operated storage facilities. Now, in terms of the market, right? And this is so important. There's a lot of people that they have no game plan going into storage and they just start, they jump on Crexy or LoopNet and they're looking at deals here and there and big and small, and they're in a big city and then in a rural market. Like there's no plan. And that's one of the things that when people come into our community, we help them define right out of the gate. So in terms of the market, I'm going to give you the general overview, and keep in mind that this is a framework. It's a rule of thumb. It's not a hard and fast rule for every single one of these. So population, I would say 5,000 on the very low end to 75,000. Now, let me share this as an example of a rule of thumb. I have coaching clients that have bought facilities in markets that had less than 5,000 people, but because of a lot of other factors and components, it could be the price, the terms, it could be something unique about the market or the facility, it made sense for them to buy in a smaller market. So, but if I was to give you just a starting point, 5,000 on the low end, ideally maybe even closer to 10,000, all the way up to 75,000. If I was going to say what the sweet spot was, maybe 15 to 40,000 person population, that type of market. Now, the next two I think are probably even more important, if not as important, is I want to see growth in the market. In other words, I want to see the population increasing over the course of the last 2 or 3 years. Are jobs coming in? Are people moving in or are people moving out? I'll share with you some resources, some free resources that you can jump online to check the demographics. But one of them is just AI. You can jump on ChatGPT, but verify what ChatGPT gives you. As an aside, medium household income. I like to be $50,000 and up. If I can get $60,000 and up, even better. I'll share with you exactly what not to what you want to avoid, essentially, which were some of the mistakes I made when I first got into storage. But medium household income is important, right? You don't want to be in a market with a low medium household income, because that's going to increase your delinquencies. You're going to have more bad debt. You're going to have more auctions. It's just going to be heavier operationally speaking, right? More management intensive. Ask me how I know. I operated in a really rough market for several years. And so I cut my teeth. And that's why I know, despite the fact that I did very well upon the sale and when I exited, I learned a lot. And that's why I'm on here able to share with you, hey, here are some of the do's, here are some of the don'ts. Now, this is something that I don't find gets enough energy and attention from a lot of thought leaders in the storage space. But you want to look at the housing market in these particular markets, right? So if I can find a market that has more renters than owners and has a really, really strong renter base, renters tend to be more transient, which means they're more likely to use storage. So if I can find 30 to 50% plus renter households, right, especially near multifamily areas, then I think that's a really positive thing. So these are just some of the filters that I walk our Storage Wins members through when it comes to identifying high potential markets, right? So tertiary markets, some secondary markets in some cases, but we definitely now, let me transition into what to avoid. Here are the things that you don't want in your very first deal. You probably don't want to buy a facility in a declining market where the population has been, like, you got negative growth over the course of the last 3 years. I don't recommend you buy in a market that has a medium household income under $40,000, right? My very first deal, the medium household income was $26,000, right? Really poor area. Now, I bought it right, but it was just a heavier operational lift, more management intensive, like I talked about earlier. Now, so this is why your buy box helps you determine what you're willing to do, because you got it at a great price in terms, and what you can stomach, and what maybe you shouldn't do. So I don't really like a fully stabilized storage facility, meaning 100% occupancy, 97% occupancy. They're at the street rates, the average of the street rates, and there's not really an opportunity for me to go in and add value, right? That's why I really don't look at big metropolitan cities where a lot of the REITs, the real estate investment trusts like Public Storage, CubeSmart, Extra Space, when they're operating within that 5-mile radius, typically speaking, I don't like to be in those markets and competing with them or buying a storage facility that maybe it's turnkey, but like, where can I add value? How am I going to generate more revenue and increase the value of the facility? And then I definitely don't recommend that you get involved in deals in high crime areas with weak demands. The returns might look amazing on paper, but the reality of it is when you get there, it's more of a headache, and that's not why I got into storage. In fact, one of the reasons I love storage is because of the low headache factor. But if you get involved in the wrong market with bad demographics, high crime, you're going to be dealing with a lot more issues than I think can be worth. Now, one thing to note here, and in my previous video, I talked about getting started wholesaling storage facilities. That's why having the buy box, which if you click on the link below, there should be a link, a pinned comment below this, where you can actually, you can go ahead and you can get my buy box template and a video that walks you through how to do this. That's why it's so important to start there, okay? Back to a few other things that I think you should avoid. In my opinion, something that has heavy deferred maintenance, right? Because what is deferred maintenance? Maybe the roof is original and it's past its shelf life. Maybe the roof is more than 30 years old and you need to replace the roof, right? Or you got to replace all the doors and the springs, and it's just very mismanaged, and you're going to have to go in there and you're going to have to dump a bunch of money into CapEx, what we call capital expenditures. Now, if you know this going in and you have the capital and you can budget for it and you're willing to take on the project, then great, right? Maybe that's part of your buy box, that you're willing to roll up your sleeves, and in exchange for the right price or terms, you're willing to take on a big project. In my case, I really wasn't. I was looking for low deferred maintenance, right? Not, when I bought my first facility, I think the only thing we really did was we added a brand new gate and operator so that we can automate that process of tenants coming in and out. And maybe we had to fix a few little things, but it was small. I think we spent less than $30,000 in CapEx, which we budgeted for, and I actually got that from my equity partner in the deal. And then the last thing is, you really just, you want to get into a deal asking yourself, hey, what is the worst case scenario? What's the likely scenario? What's the best case scenario? And never, ever, ever buy if everything has to work out. If the stars have to align, never buy on the best case scenario. I might even tell you, your first deal, buy on the worst case scenario, because everything after that should be gravy for you. If you can make the numbers work on a worst case scenario, maybe the worst case scenario is, hey, I'm not able to raise the rents, or I'm not able to do X, Y, Z, but the numbers still work. Then if you can't kill the deal, that's the deal to get involved in. I think a lot of times first-time storage investors go in trying to force the deal, trying to make it happen, when it should be the opposite. You should be going into looking at deals like, how do I kill this? Why doesn't this work? And if you can't kill it, then that's the one you should pursue. So as we start to kind of wind down here, I want to give you some resources in terms of where to find demographic data. Census.gov, census.gov is a very common one. There's bestplaces.net. You have city-data.com. And then, of course, you got Google, you have AI, definitely leverage AI. There's paid tools and services like Tracked IQ. In fact, you can get a discount if you go to, I believe it's trackediq.com/Pardo. trackediq.com/Pardo. I believe you can get a discount that should still be up. And so there's paid tools and services like that. But bottom line is, you have to make sure to buy the right deal. You start with what it is that you're trying to accomplish. right? Then you ultimately go to the buy box. And then you have to make sure that you're in the right markets. But then the numbers matter, right? We haven't even gotten to the numbers, but you have to understand, I think people talk about cap rate, and cap rate really just means it's an expression of value. What's the return on your investment, right? And then you have cash on cash returns. What's the return on the money that you put in, right? So understanding those two, if you're talking about cap rate, what's the spread between the cap rate that you're buying the facility at and the interest rate that you might have to, that you have on a certain loan. You want there to be a gap, right? If you're buying a facility at a 7 cap and the interest rate is 7, where's the value there? You know what I mean? Like, so are you buying more based on pro forma, meaning like what the facility could be generating in the future? I would rather you buy based on what it's currently doing, because in storage, the value isn't determined on comps. It's determined on the income that asset is producing. Now, of course, we factor in the future upside, but I don't want you to pay the owner for all that upside that they haven't created. Make sure that you understand how to run the numbers right. We'll probably do a future training on just exactly the jargon, right? What's internal rate of return, cash on cash, cap rates, like what are all these things, the industry jargon that people throw around that maybe might be confusing you. So we'll do a deeper dive on those things, but make sure that you understand the numbers, right? Because this is a business you're buying. Storage has the benefits of real estate, but it is a business that you're buying. So with all that said, look, here's the deal. If I was starting today, my very first storage facility was a 43,000 square foot facility that I bought for just under $1.6 million. Now, if I was starting from scratch today, knowing what I know now, I would do a lot of what I've already done. I would go out and find mom and pop storage facilities in a tertiary market. Let's say population 20 to 30, 20 to 40,000, medium household income, $60,000 and up, right? I know I said 50 earlier, but if I could get above 60, even better. That was 70 to 80% full, and it was below market rents, right? Maybe no website, no online presence, no Google My Business, maybe poor Google reviews because of bad customer service. And I would definitely go off market, right? I think going directly to brokers can be a great way to get deals, but there's more competition, right? And there's pros and cons to both. I have just, for years and years and years, I have been going off market, and I like to be able to negotiate directly with the owner. If they're open to creative financing or seller financing, amazing, because I can close it sooner. I can give them usually their price if I can get my terms, and we have training that we've done specifically on that, which we'll link below. But here's my encouragement for you. Do not wait for the stars to align. Don't feel like there's going to be a certain time when you feel ready. The learning, the growing is going to come from the execution and the implementation. That's exactly why I created the Storage Wins program in our community. So if you want help, because that's exactly what we do, is we help everyday people like you buy their first, and in many cases, their next storage facility within the next 6 to 12 months. Even if you don't have experience or you have capital, if that's you, I want to encourage you, head over to storagewins.com. And there'll be a link below, and we'll walk you through this entire process step by step. We'll give you an environment in which to thrive from, a community of people that can not only support you and help you and guide you, but in many cases, there's deals within the community. There's capital within the community that you might be able to leverage. So with that being said, I encourage you to make sure that you're subscribed so that you can continue to receive this content. But I want to encourage you. I honor you for being here, but it's not just about receiving the content. What are you going to do with this information, right? Execution and implementation is always going to trump just consuming content. So that's my encouragement for you. If you need anything, if I can support you in any way, reach out, let me know. Let's connect on social media, whether it be Instagram or Facebook. And as an aside, if you're on Facebook, I want to encourage you to join our free yet private community. So look up Storage Wins Facebook group, and then we'll have a link below so that you can join that community and engage in some conversation with me and others in the group. So with that said, I'll see you on the next one.